lot of interesting, spooky things to happen in this time of the year. So it's worth being aware of what could happen and where we're at in the cycles. So let's dive into some of our data. But first of all, if you bought the Dow Jones Industrial Average in January 1900, you'd be dead by now. So, sorry, I love these silly things. But what I love about this chart is there's times where the market just kind of grinds sideways and then it runs. And that was the 29 crash. You had a great run through the 50s and then 60s to 80 sideways. We had a great run, and now I think we're in another sideways market for it could be a decade. It could be longer. They probably peaked a couple of years ago. Doesn't mean there's not going to be good times and bad times, or good times to take advantage of. It's just going to mean that you want to be very quick to be protective because things are likely to not really go anywhere for quite some time. But that doesn't mean there's not opportunity. So let's dive into that. Long-term trend still just starting to go down. It's been pretty steady for this year, and that's not surprisingly the third year of the election cycle. A lot of multi-year seasonality is positive for this year, and we expected that. Next year is where it can start getting interesting as we get into an election cycle, and what happens right after that can be ugly. But as of right now, we kind of dip below for September, the spooky time of the year. September, October is when the biggest problems do happen in the market. So I want to be very aware of that. And seeing this happens, we're already aware. And what that means for our investors is that we're already backing out of risk. We're already toning down how much exposure we have to the stock market right now. And then another way to look at this, our money flow went negative as of yesterday. So we did do some selling and we reduced our risk to the market there as well. So will this hold up? I don't know. It's where we are right now, could be sideways in part of the month. And I have a great chart at the end of this. My last slide is going to really show what I'm thinking about that. But we could be just sideways for another week. And then the ugliness really starts in the second half of September. Positive to negative sectors, we got 5 to 6. Not hugely surprising here. Energy is strong and consumer discretionary. That means Amazon's doing all right. Interesting, the utilities have kind of come out of nowhere, and they've been very strong, and that's usually not positive for the market overall. But that's what we're looking at. Financials are also good. Communications, which is the big tech, but Apple is getting smacked for whatever reason. They're having a rough time. Over here in the negatives, we have basic materials, industrials, technology, which is turning negative. So that's the big tech. Consumer staples might turn positive here. So that's a positive thing. Well, that's actually more of a negative defensive play. So keep that in mind. And real estate, this has been positive for a while, but the relative strength measure is just way low. And then healthcare is negative. So it's very mixed. It's very messy, but we're seeing the defensives come into strength in this time of the month. And that's generally not positive for the big picture. And I mean that for a couple of weeks, not much more than that. The cycles, we saw them all push up into improving all together, very symmetrical. And then now it's just, they don't really know what's going on anymore. They're not in a bad place. We could still see another week of strength, or at least sideways movement, which is what we've been seeing for quite some time. But, it's a little more confused action than positive. And of course, energy is the one that's really showing the most strength up into the right, up into the leading box. So as the ducks go around the pond, once they hit into this weakening, we expect to get very defensive at that point. But we're not really there yet. Relative strength between the NASDAQ and the S&P. I talk about this a lot because when NASDAQ is leading, that's the QQQ, is leading S&P, that tends to be a stronger market, right? Last year, it was lesser, it was weaker, and that's when the market was going down. And then for most of this year, it's been trending up, and that's usually positive for the market. And even though we've had a little bit of a sideways movement here, we are still looking at the NASDAQ being stronger than the S&P. Big picture, I'm not too concerned just yet. So we may have a little bumpy September, but going into the year, we could have a really good run in that November, December time period. And then finally, seasonality. I love this chart. It's from SeasonX. This shows every day over the past 15 years and kind of what typically happens on it. And this purple line is where we are right now. So here I was talking about maybe some sideways movements, a little up, a little down. And then what happens around the 18th to the 20th is this. Very consistently, that's when the bad half of the market, we start to see sell-offs in the market, and then down into about the 10th of October. And then we start the messy grind up. October is always messy, but it usually will show a low. It could be here, it could be near the end of the month. But that's definitely something we're going to watch for. But if this does break down as seasonality suggests and as we expect, we are going to be more defensive going into the second half of the month in hopes of catching a really good run into the end of the year.